back, dear traders. Now let's try to figure out whether Wall Street will regain previous pessimism this trading week. The US stock market closed the highly volatile trading week with the confident gains. Notably, the market had no reasons for either optimism or pessimism. Today, market sentiment is turning sour. Does the New York pre-market suggest a further downtrend? We should not make hasty conclusions. And the stock market closed on Friday with an explosive jump. Earlier last week, major stock indexes had lost 2.1% and 2.8% and eventually reversed upwards. As a result, the Dow Jones closed on Friday 2.39% up. The Nasdaq added 3.8% and the S&P500 surged 2.39% to close at 4,023 points. In the pre-market today, stocks are trading 0.8 and 0.20% down with the prospects of a further decline. Investors seem to be at a crossroads. The S&P500 is expected to trade in the corridor between 3,980 and 4,060 points today. Despite a sharp growth on Friday, the S&P 500 and the Nasdaq closed with the weekly losses for 6 weeks in a row. It has been the longest losing streak for the S&P since the autumn 2012 and for the Nasdaq since the spring 2011. The Dow Jones revealed the worst performance with its weekly declines for 7 weeks straight. The blue chip index has logged the longest sequence of losses since the late winter of 1980. Market sentiment was overshadowed by the news from China, and retail sales contracted 11% in April, the sharpest fall in 2 years. Besides, industrial production dropped 2.9%, defying the forecast of a 0.4% increase. Such news aroused investors' fears about a further inflation acceleration and a slowdown in the global economy. In the pre-market, the stocks are trading mixed. On a Friday, shares of high-tech giants such as Apple, Microsoft, Amazon, Alphabet and Meta jumped from 3 to 5.7%. However, Twitter slumped 9.7% after the announcement by Elon Musk that he suspended the takeover deal worth $44 billion. Tesla shares surged 5.7% in the news. Stock of the Robinhood trading platform skyrocketed 24.9% after the FTX director and founder disclosed his 7.6% stake in this company. The economic calendar is almost empty this week, and the highlight of the week is a retail sales report from the United States and comments from some Fed policymakers. Large retailers Walmart and Home Depot are due to provide their financial reports. All in all, markets are going to trade quietly this week, and hence investors will take a pause for thought following a roller coaster last week. The US dollar index approached another historic high at 105 points on Friday, but tumbled to close at 104.45. The greenback closed with a growth for 6 weeks straight. Today, its index is drifting lower. The expected corridor for the index is seen between 104 and 104.70. Despite a dip, the US dollar stands tall, trading at about 20 years highs. There are no fundamentals for the greenback's weakness at this stage. Powell remained for a second term and confirmed his commitment to fighting against the soaring inflation. It means that the US dollar is set to enjoy beyond demand. The US currency seems to be exhausted after its 6-week stunning rally. Nevertheless, a further jump is possible, and this week investors will look for clues to a rate hike of 75 basis points in the comments of Fed speakers. If they do not confirm such aggressive monetary tightening, the US dollar index could enter the flat market. It's too early to predict its decline below 104. A dip in the US currency pushed the USD CAD pair down. The trading instrument closed on Friday with a considerable drop to 1.2940. The pair could continue its slight amid a dip in the US dollar. The corridor for the currency pair is defined between 1.28 and 1.30. The loonie failed to begin a solid support due to the fact that oil prices are losing momentum. Despite being at elevated levels, both benchmark oil grades reversed sharply downwards today, having erased the gains of Friday. The reason is a portion of a dismal stats from China that created the boom and gloom in financial markets. Brent crude sank 1.4% to trade at $110.53 a barrel, and WTI fell 1.1% to trade at $107.44 a barrel. In this context, the USD CAD pair again went up moderately, so the pair did not settle below 1.29. Meanwhile, Bitcoin does not give up the idea to settle above 30,000, but all its efforts have been in vain. The crypto gained ground over the weekend. Nevertheless, crypto traders are unnerved by the gloomy outlook and the recent slump in stable coins. As long as the US dollar is flexing its muscles and the US Fed intends to cut liquidity, Bitcoin is doomed to failure. The digital token is likely to decline to at least 25 or to 20,000 in the worst-case scenario, and the intraday corridor for the crypto is seen between $28,400 and $31,800. And this is what our analysts foresee for the week ahead, judging by the US pre-market and the information background. Investors have a fair chance to take a break from volatile trading. We will keep you updated on the market developments and see you tomorrow.